everyone, it's Nancy Crawshaw from Angus, Australia, and welcome to our 4th episode of Paddock Talk. Thank you for all the feedback we've had from our viewers. It's been great to hear what you guys are enjoying in this series and how we can improve it in future. So for this episode, we're delighted to be joined again by Simon Quilty, who we know has become a favourite, getting his updates on what he's seeing in the market. We've also taken a bit of feedback on board that you'd like to hear a bit more about what's happening across the ditch in New Zealand. So this episode we've got Emma Pollitt from PDG Wrightson's joining us to give us a market update on what's happening. And we're also going to be joined by the Bureau of Meteorology to let us know what's happening in the weather coming up in the winter months ahead. Thanks for joining us, and we really hope you enjoy this episode.
Hi, my name's Simon Quilty. Welcome to another edition of Paddock to Plate Market Update. I'm giving you this update from Uruguay. So a trip across South America, 5 weeks to try and better understand this global market. So today's discussion, though, is about back to basics, back to the fundamentals, the rain and the kill in Australia. And in particular, just looking at where things stand. So Australia's Bureau of Meteorology, the update is that we've had, looks like above average rainfall, particularly in the month of March. But the devil is in the detail, and these figures can be deceiving. So here we have it this year against last year and against the 124-year long-term average. So let's look at this on a state-by-state basis, because I think, as we said, the devil's in the detail. So Victoria has been hit hard by historic dry conditions. So in the month of February and March, we saw in Victoria an extreme dry. In actual fact, it was the 5th driest February-March combined in Victoria in 124 years. And ironically, the 5th wettest January in 124 years. Really difficult environment. You go from one extreme wet to 2 months of extreme dry. And today, most in Victoria are hand feeding. And when we look at the cumulative rainfall of January to April, you can see that Victoria is down, all of 3% down. But it's that traumatic February, March that really made the difference. So Victoria is dry with a real desperation for rain across most of it as we speak. When we look at New South Wales, there's been good rains in January and in April. The net effect is that we've had an increase in the overall cumulative impact of around about 36%. So good rains, a rise so far for the year compared to last year of 36% across New South Wales. And to me, this has led to a rebuild that started to commence over the last 5 weeks. And then lastly is Queensland. And this is a really important state. They've had really good rains in January, February. So a strong start to the year and a strong wet season. They are sitting above about 8% this time last year for the first 4 months. So it's a good sign. Let's now reflect, though, on these pasture growths. And you can see that in February, pretty dry across almost half of Australia. And then in the month of March, much better seasonal conditions for growing, Western Australia in particular. But you've got, I guess, parts of the Northern Territory and a little bit of South Australia. Victoria, though, is incredibly dry, and I guess parts of Western New South Wales and Southern New South Wales. That's the standouts. And we go down to April, and you can see good rain in parts of Victoria Central. Northeast is still dry, and Southeast Queensland and South Australia. And we've got a bit more dryness still on the coastal regions of WA. So challenging times for some parts. Where's the overall impact? I guess to us, well, so far, it's seen Australia fluctuate between rebuild, on hold, and a mild liquidation. So look at WA, South Australia and Tassie, the cumulative rainfall so far. WA, it's almost identical the first 4 months with last year, but up on the long-term average. South Australia is up slightly on last year in the long-term average, but Tassie is well down, 256 mils compared to last year 299 and the long-term average of 344. So good conditions, or relatively good conditions, in WA, South Australia, but Tassie is a little bit of a struggle. So let's look at Australia. Are we rebuilding or liquidating? It seems that in the last quarter, based on the NLRS numbers, we are in a mild liquidation, sitting at 49%, with the break even, of which we don't either liquidate or rebuild, at 47. But you can see over the last year, out of 1, 2, 3, 4, 5, 6 quarters, half of them were in one form or another of liquidation, 1 on hold, and 2 rebuilds. And you can see the momentum to the right here on a weekly basis for this year is we have moved into a mild liquidation Australia-wide. So let's look at it state by state. Queensland female cow kill has been on the increase. But interestingly, I think we're close to the peak. The big question with Queensland is, how long will this last? There are 2 schools of thoughts: 6 to 8 weeks, or it's going to last until December. So 7 months of protracted elevated kills. And it depends on who you talk to. Feedlotters, processors, backgrounders will say there's a lot more to come. Producers, pastoral houses will say things will tighten over the next 6 to 8 weeks. What's clear is when you look at the kill numbers, you can see that in the last 5 weeks or so, it's lifted the female kill from 36% to 41%. So we've gone from a rebuild to a liquidation, albeit mild. And when you look at Queensland in terms of rebuilds quarter by quarter, a mild liquidation is happening after 2 successive quarters of rebuild. So that's Queensland, and the $64 question given by everyone is, how long will this last? Let's move then to New South Wales, because what jumps out at you here is this long-term falling of peaks. And in particular then, when the lows come in terms of kills, that too is at a much lower level. So I believe we're pretty well peaked, and the figures show that we are moving into a rebuild phase in New South Wales, which the expectation is we're going to see this type of fall in kills as females are retained. So we've gone from 50% in the first quarter of a female kill in New South Wales, below the break even of 48.7, to today at about 47%. This all points to, I think, a strong rebuild out of New South Wales for the balance of this year. After we saw in Q3, I thought, a very heavy liquidation, a period on hold, and then in Q1 back to a mild liquidation. So we are in a rebuild phase for New South Wales as of the last 5 to 6 weeks. When we look at Victoria, what jumps out at you here is just the dramatic fall in kill full stop. We're now down to, at the peak of our kill, because liquidation is in full flight, at 20,000 head per week. If you go back only 3 or 4 years, we were talking around about a 30,000 head per week. So the overall size of the herd in Victoria is down dramatically, along with New South Wales, and I think Queensland, as we've shown you in those long-term kill cycles. So with that, Victoria's kill has lifted to 73%. We are in a liquidation period and have been for a good 18 months. So that means once the rain comes, it will be a heavy rebuild and numbers will tighten dramatically. And last but not least, when we look at what's happened across WA, Tassie and South Australia, we had a heavy liquidation in WA in the first quarter of this year. Now it's pulled back with rain, still at a mild liquidation, but nonetheless there. In terms of South Australia, it's been liquidating for the last 2 quarters. And in Tassie, just to sheer lack of numbers, it's a rebuild as we speak, well below the 55% of a dairy-driven state. So the bottom line, where to from here? Lots of belief that there's going to be continued high kills in Queensland. And with or without that, I think that the decrease in the extreme numbers across all the other states in Australia, I think we'll see weekly kills start to fall no matter what after the next 6 weeks. So even though there is talk of these elevated kills, I've driven here 2 scenarios. One, that we have an ongoing heavy kill in Queensland, and the other scenario is that we have a short and sharp 8-week period of heavy kills. Either way, due to the lack of numbers in the other states, I think we're going to see all those processors outside of Queensland come to Queensland to start to buy and buy in numbers. So what I call the inflection point is when suddenly, after this period of 105,000 head, it's game on, where producers go from being price takers to price makers. So the first scenario is a short and sharp kill in Queensland of 8 weeks, and then numbers start to fall dramatically. If that's the case, we get to the inflection point in early February next year. If there is an elevated kill of 70-odd thousand, 78,000 per week till December, no matter what, due to the lack of numbers across Australia, I expect we're going to see falling kills, but it's going to delay the arrival at the inflection point to May next year. So it adds another 3 months. Either way, I expect prices this year to rise. Effectively, to me, it's all about the lack of numbers in all the other states. So with these beliefs I've got, the big assumption is rain starting in June, July, and remaining until August, September this year, heavy rains. So here are the basic bottom line assumptions. With rebuild occurring in other states and a sustained elevated Queensland kill, I expect we'll see solid buying in Queensland from every other state. This has already started with Victorian buyers today in Queensland. This is highly unusual for the month of May, and the expectation, normally it happens in July. So I can tell you now, it's only get more and more intense from here. Secondly, the rebuild in New South Wales has just begun. Other states also need to start rebuilding, and when that occurs, I think we're going to see the value of heifers jump dramatically. This I don't think we'll see until at least early July, should the rain come in June. So if and when heifer demand starts, Australia's supermarkets will be buying with gusto. Domestic demand for beef today in Australia is in good shape, contrary to popular belief. Ongoing demand for heavy cattle to go out as live cattle, I think, is likely to continue as Indian buffalo prices remain high. With increased numbers of heavy steers in Northern Australia, the potential emergence of restockers and strong domestic demand remaining, feeder steers might start to tighten after July. So you've got demand for heavy steers and grass in the north, which means that what would have been feeders have now been carried into heavy steers. You've also got supermarkets chasing feeder steers as well, because their desire is the younger animals, and you've got restockers. None of this, I don't think, is starting to happen until probably mid to late July, but nonetheless, strong demand. Now, all of this is with the assumption of rain, and without good rains in June or July to September, many of the above workings will need to be rethought. But let's say with good rain, I believe the demand from all other states in rebuilding will counterbalance the expected larger numbers in Queensland. If the numbers are not there, then prices will move higher at a much faster pace. If the numbers in Queensland are there, but rain occurs elsewhere, prices will move higher, but just at a much slower pace. Either way, higher prices are expected this year for cattle if rain comes in June, July, August, September. So with that, I'd like to thank you. Today's discussion was about back to basics, so back to the fundamentals, because without these fundamentals, we need a lift in overall cattle prices in Australia. So once again, thanks for joining us today. Cheers.
Hi everyone, my name is Emma Pollitt and I am a livestock genetics representative for PGG Wrightson here in Gisborne, New Zealand. Right, so I thought I'd start today's video with just a brief overview of conditions that are affecting New Zealand farmers right now, particularly sheep and beef farmers. As a lot of you would have heard, over the last sort of 12 to 18 months, we've been heavily impacted by weather, as no doubt yourselves have been. Beginning sort of February last year, the east coast of the North Island and other pockets of the North Island were heavily affected by Cyclone Gabriel. This brought an awful lot of rain over a very short period of time and did immeasurable damage to our infrastructure, our farming land, our communities, everything. And we're still in recovery mode from that because we just continued, particularly here in Gisborne, we continued to see a lot of wet conditions into spring last year. And then beginning at end of last year, beginning of this year, we started a drought. So in the pockets of the South Island, they have seen adverse drought conditions, and they've had a little bit of rain lately, but not enough to get good levels for the winter. So they'll be feeding out for a long time yet, and it's been a very difficult season for those farmers as well. In other pockets of the country, moving on to land use change, we've seen an awful lot of pine trees planted into what was once very productive sheep and beef country. So we've had thousands and thousands of hectares planted into a lot of carbon credit land, which is pines that will never be harvested. And that's taken a lot of ewes and cows out of our system. And we're just starting to sort of see the effects now as people sort of leased back the farmland until it actually got planted. And we've seen in the last 12 months a lot of that country actually be planted in the stock leave. So we're starting to see the impacts of that now, and that's really going to affect our beef cattle numbers as well as our lamb numbers going forward. The economy here is a bit bumpy, as it probably is everywhere else in the world. Beef and lamb New Zealand, which is similar to MLA Australia, I believe, are estimating a 50% loss in profit across all sheep and beef farms in the country, which is a huge hit. And we're seeing that too in fertiliser use. Fertiliser use in sheep and beef country is down about 40%. So people are just watching their pennies a lot closer. Interest rates are up, inflation's hovering still, and we're trying to, do less with more all the time. So those are the factors that are sort of playing into our markets at the moment, and making for a little bit of a rocky time in sheep and beef farming. Now we can't talk about beef here without talking about sheep to some degree. Sheep often go part and parcel here with beef country. So just touching on sheep, because as we know in New Zealand, the lamb trek drives a lot of investment and performance on sheep and beef farms. So overall, going back to that land use change as well, our flock sizes in New Zealand, we're down about 5 to 10% in the number of ewes in the last 12 months, and that continues to fall. The money made in sheep has dropped significantly in the last 12 months. Lamb meat in particular is down 13% from the 5-year average. So we're sitting at about $6 per kilo of carcass weight at the moment, which is down $1.35 from 12 months ago. And our mutton, we're sitting at $2.70 per kilo of carcass weight, which is down $1.50 from 12 months ago. And we haven't seen the seasonal fluctuations yet that we typically see at this time of year. We sort of see a little bit of a climb out, a little bit of an increase in the schedule as we run out of supply, or supply slows down, and we haven't seen that yet. And the meat companies and all the important people are sort of estimating we won't see much shift until the end of this year into early next year. A recent big thing here in the autumn, obviously, is our weaner fairs. We have some started the North Island about a month ago, and we're still continuing through the country. So that is ongoing, but preliminary results are sort of giving us good indicators. Angus cattle in particular, the big lines of great steers, have sold well to repeat buyers. So those guys have stayed loyal to the Angus premium and the Angus farmers. So they're all being rewarded for that. Our sort of 270 kilo weaners are seeing about $3.60 live weight. We've actually seen a trend where our lighter cattle, our lighter weaners, are making more dollars per kilo. So you compare that $3.60 for the heavier guys down to sort of $4.40 for the sort of 200 kilo steers. So that's been an interesting sort of turn of events lately. Into the heifers, weaner heifers, of course, they've seen a little bit of they're always a little bit behind, but for comparison, they're about 50 cents behind for the heavier animals. So the 270 kilo heifers are sitting at about $3.10, and those heifers sort of 200 and below are sort of $3, $2.90 in that sort of realm. But they are keeping that Angus premium as well, obviously, so that's good. Keeping with cattle, just a quick overview of our end values that we're seeing here in New Zealand at the moment. So our sort of 300 kilo P2 steer, we're seeing about $6 for, and that's had very, very little movement in the last 12 months, which is a good sign, and it's giving us a bit of security in our beef production. So that's given us a lot more confidence, particularly around buying young stock. And then our cow schedule, so our 190 kilo cow, we're coming into quite a big time of cow kill post scanning, coming out of our dairy herds as well. So this will be a hot topic, but 190 kilo cow, we're seeing about $4 a kilo carcass weight. So that's still reasonable money. So people have a lot more confidence in the cattle at the moment compared to the sheep. The markets are steady, particularly in the Middle East and Europe for beef demand. We're still seeing a bit of a weakness coming out of China. They have a lot of inventory at the moment. So it would be nice to see China sort of become a bit more stable, but we're quite happy at the moment with where our beef's ending up. And last on the agenda coming up is we are coming into bull sale season in New Zealand. So that's a big part of what I do in my job, is that we sort of manage bull sales a little bit, or mostly I should say. So we are sort of keeping aware of the numbers of bulls that are going to be on offer this year, going back to that land use and sort of cow numbers stabilising now. We're getting a better idea each year of where we're actually going to end up in terms of demand. And we saw a little bit of a correction last year, and we're predicting we're going to see more of that this year. So we're just very aware of numbers of bulls going forward. We might see a little bit of a drop in clearance rates, but we are confident off the back of weaner prices and the end value of the cattle that there is still budget out there to pay good money for good bulls. Particularly Angus have always, they're still very, very popular here, and they have that backing of quite high demand. So that's a positive sign. But obviously as well, we haven't quite started with sales yet, and going back to the land check, that drives a lot of spending on farm. It will be interesting to see where people have put their budgets this year. So yeah, that's something to look forward to. But the bulls around, well, I've only seen the bulls in the North Island so far, but so far so good. They're all looking really good. In most places they've had a reasonably kind summer and are getting an autumn flush now. The South Island bulls and those pockets of drought, those guys have tried really hard to keep them ticking along, and I'm excited to see what they've presented for 2024. Thank you.
Welcome to the Bureau's long-range forecast for May to July 2024. First, let's look at recent conditions. April rainfall was above average across parts of northern and eastern Australia. In early April, some areas of Sydney and the Illawarra had flooding after 200 to 300 millimetres of rainfall in 2 days. In contrast, large parts of the country had below average April rainfall, especially in the far southwest. South Australia's rainfall was the 8th lowest on record. Since October, there has been above average rainfall for much of the north this wet season. 4 tropical cyclones crossed our northern coastline, and other monsoonal activity also brought heavy rainfall. April was warmer than usual around most coastlines and much of Tasmania. Some areas had their warmest April on record, including parts of far north Queensland and coastal Western Australia. In contrast, it was cooler than average for a large area inland and into the south. Soil moisture this month has been above average across large areas of the north and east, but below average in some southern areas, especially in Western Australia and South Australia. At the end of the northern wet season, most water storages in the north are full. Some storages in the south are lower than this time last year, including the southwest coast at around 35%. The long-range forecast for the months ahead shows most of Australia is likely to receive lower than average rainfall during May. This may not be so noticeable in northern Australia, where rainfall from May to July is generally less than 25 millimetres. Historically, most other areas have between 10 and 200 millimetres of rainfall during May, so this forecast shows the likelihood that rainfall may be less than usual for this time of year. However, the forecast for June rainfall looks very different to May. The forecast shifts towards some areas having an increased chance of more rainfall than usual in June. Large areas have no strong wet or dry signal and have roughly an equal chance of above or below median June rainfall. The typical range of rainfall for this time of year may be the best guide for these areas. Near median to high stream flow is likely for most forecast locations until June. However, low flow is likely for most sites in Tasmania and in the southwest. While the months are getting cooler, there is still a high chance of above median temperatures across the country from May to July. Let's look at some of the recent influences on our climate. The significant warmth in the oceans continues to be a major feature of the current global climate. Ocean temperatures have been at record high levels continuously since last April. The Bureau will continue to monitor sea surface temperatures in the Australian region as they have a large influence on our climate. In the Pacific Ocean, the El Niño Southern Oscillation has returned to neutral conditions, neither El Niño nor La Niña. In summary, the forecast shows rainfall is likely to be less than usual in May. There's a chance for above average rainfall for some areas in June, and higher than usual temperatures are likely for May to July. You can follow the long-range forecast on the Bureau's website. It's updated regularly with the latest guidance for the weeks and months ahead. You can also select your location on the maps to see more details for your area. Bye for now.
Thank you everyone for joining us for Paddock Talk. We really hope you've enjoyed this episode. Please feel free to continue reaching out if you've got any feedback on who you'd like to see in the Paddock Talk series and how we can improve this series. Thank you and all the best for the winter sales ahead.